Very good evening, ladies and gentlemen. On behalf of Ambit Capital, we welcome you all to the Q2 FY21 earnings call of EIH Limited. In today's call, we have with us Mr. Vikram Oberoi, Managing Director and Chief Executive Officer, and Mr. Kalol Kundu, Chief Financial Officer of the company. I will now hand over the webinar to the management for their opening comments, post which we can set the floor open to Q&A. Thank you, and over to you, sir.
Kalol, would you like to start with the presentation, or how would you like
to?
Maybe
you can give a brief introduction, and I'll then follow it up with the presentation.
So, good afternoon, everybody, or good evening, everyone. I know many people working from many locations, so I hope wherever you are, you're safe and well. Thank you for giving us this opportunity. COVID, as you know, impacted our lives in many ways, both professionally and personally. From a hospitality point of view, we see, at least within India, leisure demand, particularly in the premium segment, being strong. Some of our hotels are actually doing higher occupancies with similar or marginally reduced rates, but not significantly reduced rates compared to the same time last year. Corporate business is still a problem, and many corporates are going to have work from home for this year and perhaps even into the summer of next year. We hope a vaccine will be out soon and people will be able to travel again, and corporate travel will resume. We do, within the organization, efforts still are to secure corporate business wherever that possibility exists. I think that's really about it. We've done the alliance with Mandarin, and which you may have seen or read, and if you haven't, we'll briefly talk about that as well. So let me, with that, pass it on to Kalol. Kalol will go through the presentation and share the financial results as well. So over to you, Kalol. Thank you so much.
Thank you, Vikram. Good evening, everybody. And thank you once again for giving us the opportunity and sharing time with us. I'll take you through the presentation, which is just a while back been uploaded on the stock exchanges. So it's available there, but I'll take you through the presentation as well. So we'll begin with the industry outlook, and it doesn't need to be highlighted that the effect of the global pandemic on the travel industry in specific has been really very steep. As per a EIHOTEL research report, which was published only last month, the travel and tourism value chain is estimated to be doing a loss of 5 lakh crore rupees, which is almost equivalent to about $65 billion. Erosion of revenue streams are to the extent of 80 to 85%. Occupancies have come down by almost 30% in general. Occupancies in case of branded hotels, what used to be about 75 to 80% in January, February, came down to about 45% in March 2020, and thereafter plummeted to between 15 to 22% in July, August. And these are all data as provided by the research report that I mentioned. The ARR of branded hotels came down by about 50% in general. We, of course, have had our own strategies on how to deal with the pandemic, and we'll take you through it. But generally speaking, of course, as we all know, the travel industry has been very sharply affected. Now, our outlook, as we elaborated in our last quarter presentation also, is essentially to look at a threefold strategy to endure this stage, to revitalize, and then to flourish. And I'm happy to say that on a long-term basis, we really, I think, are on a very strong footing, and I'll explain that why. But before that, talking about endurance, I think just to remind all our investors that our inherent strengths lay in the excellence of the Oberoi and Trident brands, because as you all know, we are consistently awarded amongst the world's best. Industry-leading service competencies, where our net promoter scores have consistently averaged above 90% for Oberoi and above 80% for the Trident brand. I'm also happy to share with you all that our company has been the market leader as per the STR rankings, having clocked the highest YTD ARR across all the hotels against competition, and this is based on STR data. We have consciously chosen not to deep discount our rates because we believe that this is albeit a longish phenomena, but it's a temporary phenomena, and we don't want to dilute our positioning. So 10 of our 15 operational hotels owned or managed by EIH Limited in India were ranked number 1 and number 2 on STR in September 2020. Moving on, as part of our endurance strategy, we had to make sure that our balance sheet continues to be robust, as it has always been in the past. And we are able to demonstrate a
Apologies, I think there were some issues at the management line. Please give us a couple of minutes.
Oh, hi, we're back. I don't know what happened, but I thought I had to log in again, which I haven't. Is Kalol back online?
I think Kalol sir is not on the line.
He's disconnected. I think he'll connect in a minute.
Okay, sorry about that. I actually saw Kalol's image freeze, and then I just tried to call him on WhatsApp to see if he can reconnect. Let me try calling him again. But I don't think he realized he was...
So I think Kalol sir is back now.
Brilliant, brilliant. Okay, lovely. Thank you. Hi, Kalol.
I am so sorry. I think network issues. Am I audible and visible?
Yes, sir, you're loud and clear.
You are indeed.
All right. Thank you so much, and sorry for the inconvenience. So what I was mentioning is that our weighted average cost of debt has come down to 7.7%. And although there is an increase in debt by about 52 crore rupees, our interest cost effectively for the first half year is 2 crores less than what it was last year. In terms of financial agility, I think the company has demonstrated a good method of handling the levers of change, whereby the drop in revenue is about 245 crores, which is about 78%. However, there's a corresponding drop in expenditure as well of about 116 crores to the extent of 43%. So this, when again divided into variable and fixed expenses, I think while variable expenses have dropped by 71%, the good news is that this has given us an opportunity to have a reduction in our fixed expenses to the tune of 29% for the Q2. This, we believe, is something that we are going to try and maintain in future as well, and which will therefore give us a lot of edge going forward. The other positive things I would say is our working capital management, whereby a drop in net operational assets and liabilities in the first half of the year was to the tune of 111 crores. I've already spoken about the WCA, CD and the interest, so I won't dwell on that. So just a snapshot in terms of how a reduction in expenditure in various heads have been. So consumption has come down by 69%, power and fuel has come down by 38%, primarily because a large chunk of this expense is a fixed expense, which cannot be curtailed. Payroll expenses have come down quite drastically by about 31%. And although we don't believe, the whole of this saving will remain in future, but what we do believe is at least 25% reduced payroll will be something that we would look forward to the years to come. Likewise, in other expenses, there's a total reduction of about 43%. Our balance sheet has been robust, as has been the case in the past as well. Our debt to equity ratio as on 30th September was 21%, the lowest in the industry. And I'm also happy to share, as many of you or most of you would be knowing, and have also invested, and I thank all our investors for the overwhelming response that we got for the rights issue, which was subscribed 1.6 times. And as a result of that, the net debt as on 31st October 2020 has reduced to 261 crores, with the debt equity ratio reducing to 0.1x. So this slide also provides a sort of a journey from September 19 to September 20, how our interest rates have come down from 8.81 to 7.77. So this is essentially on account of some nimble-footed treasury operations that the company has been carrying on. Moving on to our other inherent strengths, of course, strong financial backing of our promoters, institutions, and bodies corporate. Our shareholding pattern, as you all know, is very well balanced between various institutions, bodies corporate, and the promoters, as well as individuals. In fact, after the rights issue, the share of individuals have actually gone up from 9% to 12%. So that continues to hold strong for us. Talking a little bit about the rights issue, we had a issue size of 350 crore, where about 5.37 crores shares were offered at a premium of 63 rupees per share, which was open from 29th of September to 13th of October. And this 350 crore we wish to utilize. In fact, 280 crores worth of debt has already been repaid back as we speak. And the balance 66 crores is available for general corporate purposes to be used for various opportunities that may arise in the short term. On our revitalizing strategy, I think the biggest discussion on this is our strategic alliance with Mandarin Oriental, which is called as ONMO, and I'm sure Mr. Vikram Oberoi would like to speak about it in greater detail. The Oberoi One, our customer focus program, was launched on the 18th of August. And of course, our Oberoi Hygiene and Safety Shield deployment continues to be robust and continues to earn the respect of our guests. We have described in the past as well that we believe that we have a very strong brand pull with combined businesses for both brands from the direct segment, 100 plus sales team members servicing about 6,500 plus corporates, plus 1,500 plus travel companies, DMCs, FTOs, etc. An enhanced CRM program is under deployment with a 360-degree view of our customer. We've also forayed into institutional catering by one of our subsidiaries, our wholly owned subsidiary, the EIH Flight Services in Mauritius. And of course, in India, the Oberoi at home food delivery, that's something which has been catching on. And we are actively pursuing this as well for the moment at Bangalore, Hyderabad, Delhi, Gurgaon, Calcutta, and Mumbai. The other strong story that we have is around the Oberoi Center of Excellence, which you would recall was launched a year back, which is leading our transformative digital interventions. And I'm happy to report back to you that we've been awarded in the Business Transformation Impact category at the prestigious SSON Impact Awards Asia of 2020 just recently, where essentially our facility was one of the youngest facility, but then there were very large companies who this competed with. which really shows that, which gives us a lot of confidence to say that we are probably on the right track insofar as transformative digital interventions are concerned. Our flourishing, of course, will happen with our new projects, 9 new hotels and resorts in pipeline. There are several others. As and when they happen, we will keep announcing them. 3 owned and 6 management contracts. The 2 MOUs signed, 1 in India and 1 in the UK and in London. And a brand new flight kitchen. This is something that we have spoken about in the past in Mumbai, which will be operational by December 2020. And of course, with the Oberoi Center of Excellence, onboarding of new properties have now become very seamless with very minor incremental costs. So these are all things or levers that are actually going to help us go a long way in the long run. I think in terms of strong relationships with domestic and foreign clientele and intermediaries, RFP acceptance continues to be there with most major companies traveling in India. And we are all waiting eagerly for the international travel to open up after the pandemic really recedes. I think on the O&MO Alliance, Mr. Vikram Oberoi would be the best person to speak about it because he's been leading it for the company. So Vikram, in case I'd leave this to you.
Okay. So I think, when we looked at Mandarin and when Mandarin looked at us, one of the things we looked at, which one looks at any sustainable long-term relationship, is are both our organizations aligned with our value system, the way we look at our guests, the way we look at our colleagues, with our practices of high ethical standards, etc. And I think in our meetings with Mandarin, that was very apparent that the organizations have similar values and similar culture. And I hope this gives us a strong foundation for a long-term relationship. The other thing is that Mandarin has about 30, well, to be precise, 33 hotels across the world, and these are all exceptional hotels. They're also in locations that are very attractive to Indian clientele or to our Indian guests, whether that's Thailand and Bangkok, London. They have a lovely hotel overlooking Hyde Park, and of course their hotel in New York. And these are just some examples of their hotels. Likewise, Mandarin doesn't have a strong luxury client base of Indian guests, and they certainly feel that, with Oberoi, our Vilas hotels, our leisure hotels, the rates we command and the loyalty that we have from our Indian guests and also our foreign guests, that there will be an opportunity for their guests to stay with us and our guests to stay with them. And this is primarily based on the fact that in most locations where Mandarin is present, we're not. And in most locations where we are, obviously Mandarin isn't. It's the inverse. And really what makes this alliance somewhat different to others is well, number one, the prominence that the alliance has on both our websites, and that's the external face of the company, or the Oberoi hotels and resorts and Mandarin Oriental hotels, to anybody who is looking at our hotels, whether it's Mandarin or Oberoi, without actually visiting our hotels. So that's the first point, really, where we touch our guests. The second thing is Mandarin have a strong loyalty program. It's called Fans of Mandarin. And we have Oberoi One, which is just launched. So there's an opportunity for both brands to promote to their loyalty members, and we will be doing that. Also, what I didn't mention is on our website, there's the ability also to make reservations at each other's websites. Roughly 1.5 million visitors pre-COVID per month. And about 700, I may be slightly off, so don't quote me, but if I recall correctly, about 700,000 loyalty members. or maybe just under 750,000 loyalty members between both brands. So an opportunity to provide them special benefits, special experiences, and of course, above all, exceptional service and exceptional hotels. So that's really the basis of the Mandarin Oriental Alliance. We actually started working on this, believe it or not, about 18 months ago, maybe a little bit longer. And we're going to launch in April of this year. And then COVID hit us end of February, beginning March, and the whole world came to a standstill. And at that point, we spoke to our colleagues at Mandarin and said that we're probably better off not deferring the launch during the lockdown. And then we reviewed it again later on in the year. I think if I'm not mistaken, it was June or July. And we said, people still aren't traveling. People are just maybe leisure travel is taking place, but really travel is largely diminished. And we said, should we wait further to launch this? But we thought that with people spending more time at home, this may be a better opportunity to really promote the alliance, also do all the training internally that we need to do both at Mandarin and Oberoi. And this involves collaboration on human resources, food promotions, spas, sharing of best practices, etc. So there's a lot of internal things that we can also do. And we said, let's use this opportunity to really do that rather than waiting till next year. So very briefly, that's the partnership we have with Mandarin Oriental through the O&MO Alliance.
Thank you, Vikram. And of course, we'll keep our investors posted as we go along in future. The Oberoi at Home, this is something that we started off quite early on during the pandemic days. And it's been doing good. I think there's a lot of traction and demand for this. However, what we have also noticed is post the lockdown, a lot of our guests really want to come to our restaurants and touch with that food and beverage business, and in most places have been doing pretty well. Talking about the performance.
Sorry, Claude. I was just going to say in our city hotels, Touchwood Food and Beverage has been doing well.
That's right. So talking of the performance highlights, the quarter ended September 2020. Of course, compared to a normal year, these are no numbers to be shared, but for this particular year, I think that this quarter at least is better than the first quarter. And there is there are some green shoots that we can see here. Total revenue of 69 crores with an EBITDA loss of 86 crores and a profit after tax of 115 crores minus on a standalone basis. And likewise for the half year, we ended the half year with a profit after tax of basically a loss of 233 crores. Consolidated profit and loss account, again, 118 crores PAT. And of course, all this is available publicly, so therefore I'm not really dwelling on these numbers. Some trends that we can really talk to. This time there was no point in sharing any information which is compared to some other period because it's really not comparable. But as Mr. Vikram Oberoi also mentioned, I think earlier on, what we are noticing is that there is, post the pandemic, a lot of demand. Some of it was definitely pent-up demand, but a lot of it is where people want to really come out and spend their leisure time, with their families and friends. And therefore, what we see is that luxury leisure is something that is really gaining traction or has been gaining traction during the last couple of months. So what this chart shows is actually, this is classified into Oberoi Leisure, Oberoi Metro Properties, others is a small element, Trident City Hotels, Trident Leisure Hotels, Trident Metro Hotels, and a total of all of these. As you would see here that in terms of occupancies, there was a good increase starting from June onwards. So it opened in June, the hotels all opened in June. and it went up, let's say, for example, in case of Oberoi Leisure, to 23%, then on to 36%, and we did touch 44% in the month of September. Of course, this includes managed properties as well. So this is really a hash total of all the occupancy numbers. Likewise, the Trident City Hotels was particularly strong in July, and this was more to do with business from stranded guests, etc., plus a lot of repatriation business, some business from the Vande Bharat flights, etc., which really dipped down when the various measures that were initially implemented for quarantine were removed. So that really dipped down from 53% to 37%. And then September onwards, it started rising again. And I must say here that there are some good corporate tactical businesses that we've picked up, some large businesses in our city hotels in Mumbai. And that is really also a segment that is showing some promise, although transient corporate travel is yet to take off, as Mr. Vikram Oberoi mentioned a while back. So this more or less brings us to the end of the presentation. This is something that...
may I just add one comment on, Oberoi Leisure. In addition to the occupancies, actually what we've seen is that we've also been able to maintain the rates. So these aren't heavily discounted rates at Oberoi Leisure Hotels. And we've, even across our other hotels, if you go to our website and see the rates, by and large, we aren't going the heavy discounting route that others are doing. There's no point discounting if there's on those channels, if demand isn't significant, it just impacts the positioning, but doesn't result in any significant increase in business. So we haven't chosen that route. I just wanted to mention that as well.
Yeah, thank you, Vikram. I think that really is the strategy of the company. And essentially to say as we move ahead, it's basically the three pillars that we spoke about, to endure, to revitalize, and then to flourish. What we intend to ensure is that we remain strong when business picks up in the hospitality segment, which of course is long due, the upturn in the hospitality industry. And at that point of time, I believe, or we believe as an organization, that we will be very strongly positioned with a strong balance sheet as well as a strong positioning, and with our alliances, etc. We can look forward to optimism going forward. So thank you so much for your attention, and of course we are happy to answer any questions that you may have.
Thank you, Mr. Oberoi and Mr. Kundu, for a very detailed presentation. Now we will open the call for Q&A. Anybody who wishes to ask a question, please raise your hand and your line will be unmuted. We'll wait for a couple of minutes before the question queue assembles. So we have the first question from the line of Sumant Kumar. Sumant, if you could introduce yourself, and Vikram, if you could please unmute his line.
I am unmuted. Would you like me to mute?
No. So I'm asking my colleague, Vikram.
Oh, sorry. I beg your pardon.
Yeah.
Hi, sir.
Hello, Sumant.
Yeah, hi. My question is regarding how the things are happening, particularly in wedding segment. Number one. Number two, how is the staycation for EIH panning out? And how is the customer mix in this quarter? How is this going to be there for your key cities like Mumbai and Delhi?
Sumant, first of all, hello. How are you? It's nice to talk to you again.
Yeah, I'm good, sir. How are you, sir?
I'm well, sir. Thank you so much. So, Kallol, please feel free to add anything if I miss something out. I think the first question, Sumant, was on weddings. And in fact, I would say we've benefited because our leisure hotels generally are smaller, and Indies tend to be very large, so they use multiple hotels in a city. So let's say, for example, in Udaipur, if there's a wedding, guests will stay at main events may happen at the Oberoi, or they will ask, but guests will also stay at Trident, Leela Hotel, and possibly Lake Palace as well. And with the reduced size of weddings now, we're able to get all the business at our hotel, both in terms of food and beverage and of course rooms. So that's one trend. The second trend we're seeing is that locations, for example, we haven't done weddings at the Oberoi Rajvilas. We've started to do them now, and similarly at the Oberoi Amarvilas, where we hadn't done weddings, we've started to do that now. So that's very profitable business. It comes in at a very good rate for the room, and also for food and beverage spend. And we're very grateful that this segment is doing well. There are many auspicious days, as we all know, over the next 2 months. And whether that's our leisure hotels or our city hotels, there is strong demand in all locations for wedding business. And that's been in the past, and it continues into the present and, of course, the future. So I think that was question number one, Sumit, and I hope I've answered that. Question number two was you asked about staycations, if I'm not mistaken. And staycations are, our city hotels, whether that's Gurgaon, etc. They do higher occupancies on weekends. What we really need to think about is how we can get business not only on weekends but also on weekdays, because rooms are a perishable product. If they go empty, is there a way for us to realize revenue not only on weekends but also on weekdays in our city locations? Leisure locations occupancies peak on weekends, but there's still demand even during the week at our leisure locations. People are working from anywhere, and they can easily work while on holiday or while traveling on holiday, but at a holiday location with family or friends, and continue to work. And I think your last question was on the mix, and sorry, I didn't understand what you meant about guest mix. So maybe you need to clarify that question to me. But let me try and attempt to answer it. Our guests today are largely, in fact, they're all people who are either Indian or reside in India. There's virtually no foreign travel. You can come to India on business if it's very, very important, but there's so many restrictions if you come in, so that business is still very, very insignificant for the country, leave alone for us. So if there's anything on the last question that I haven't been able to address, please let me know.
My question is talking about the customer mix. What is your view on corporate travel? When you expect that will start, particularly large corporate?
So Sumit, your guess is as good as mine, and I would turn that question around and maybe get your insights. And I'm not trying to be smart. I think really it's hard to tell. If you would ask me, I can give you my personal opinion. My personal opinion is that we will have a vaccine that has cleared phase 3 trials early part of next year. I think that to produce it in large enough numbers to vaccinate will take at least 6 months. Many people say it'll take longer. My view is it will not take longer, because I think there is so much pressure across the world with all pharmaceutical companies, and there's a great opportunity equally for them. And I think, one thing we know is that how quickly we as human beings adapt. And I think that same adaptation will take place on vaccine production. Of course, in India, we have one of the largest vaccine producers, but globally, I think this will take place. So I think vaccines will be administered much more quickly. I think the first hurdle is phase 3 trials being successfully done, and then the rollout. and I'm hoping that we will see both corporate and leisure travel by the middle of third quarter of next year.
Last question is, how is the occupancy improving overall month on month? And also, can we expect a break-even kind of scenario in Q3?
Well,
break-even I'm
Kalol, am I okay to answer a question looking at future? I don't know. I don't want to do anything wrong.
Well, we don't want to give in forward-looking statements, Sumant. Okay, but yeah, I did show you the trend and the pattern of the occupancies on the chart. It's also available on the presentation, which is put up on the stock exchanges. But generally, I think, Vikram, if you have any thoughts on what you feel will happen going forward.
Just the trend, talking about not number, how things are panning out, how is the improvement MOM?
Yeah, and I think, Sumant, if you have a look at the chart, it'll clearly show you the occupancy charts. What's happened and therefore what the trend is in future. I mean, let me just tell you how. I'll give you another my personal perspective, and that's not to say that I know a lot or what I'm saying is correct or not. But if you ask certainly me a month ago when we were hitting 1 lakh cases a day, will that number drop to half over the next 4 weeks? And my answer would have been no. So I think, number one, the situation is very dynamic. I think if the numbers continue to decline on new cases reported, and by the way, India has quite robust testing. It's 1.2 million tests a day or thereabout. So by no means are we not testing in India. And if those numbers continue to decrease, if they do, and I'm not saying they will, but if they continue to decrease over the next weeks and months, I think things could change quite substantially within India. Of course, we know what's happening in Europe and North America, so I won't comment on that. I think they still have a long way to go, and with winter months, I think numbers will continue to escalate in the colder climates. So it's hard to say. We're seeing an upward trend. The slide will show. If cases come down, I think that will become even stronger.
So just to add to what Vikram said, if you see, Sumant, that and we've emphasized this before, that luxury leisure is something which has seen a continuously uptrend in the last several months. Since the time it opened, July, August, September, it's been consistently going, and there is strong demand for it. Overall, also, this helps the company to really maintain a trajectory which is on the growing side. Now, obviously, to extrapolate that into future, I think will be a little foolhardy. But as of now, as things stand, it's not as bad as one would have thought it to be in the first quarter.
Thank you so much.
Thank you. The next question is from the line of Mr. Vikas Ahuja. Vikas, if you could please introduce yourself.
Yeah, hi. Thank you for the opportunity. This is Vikas from Antique. So I have 3 questions. Number one, if you can talk about the bookings for the holiday season, how it's faring. If possible, to give us some sense, compared to last year, how much bookings are down this time, maybe during this month or maybe last 2 months. My second question is, yesterday, I'm boiling back to what Sumant asked. Yesterday, one of your larger competitors, they said that they have turned EBITDA positive in September, and the cash burn has almost dropped to 1/4 of the levels what it used to be during the lockdown. So I understand you don't give a guidance on EBITDA, whether you will turn positive or not, but in September, whether EBITDA was positive compared to the first 2 months. And my third, the final question is, whenever we will have revenues which is above pre-COVID levels, maybe in FY23, 24, or maybe sooner, do we think margins will be better this time because the certain kinds of cost savings which we have seen right now are going to stay? I stop here.
Vikram, you're on mute.
Sorry. So let me go with the first question. What we see is strong demand anytime there are any holidays, and we expect that to be no different going forward. Hotels will run very high occupancies at a good rate, and we're confident that will happen both during the Diwali holidays, Christmas, New Year, etc. And I don't think we're unusual in that. I think there is any well-run hotel, whether that's an Oberoi, a Taj, Leela, etc., will achieve strong occupancies and good rates, particularly in leisure locations. But even in city locations, I think they'll do well. The second question was on break even, and I'll let Kallol answer that. I don't know again how much information we can give and we can't. And the third question was, I'm trying to remember. The third question was about costs, and absolutely we will see cost efficiencies continuing. I think Kallol covered that right in the beginning, where we today have roughly a 30% decrease in fixed costs. We're hoping that a large part of that will continue, and we're looking at various things, including multi-skilling, etc., to see how we can achieve that. The thing that we keep in mind is that we must, whatever solution we come up with, needs to enhance the guest experience. It needs to work for our colleagues to make it better for them. And thirdly, it needs to work for the organization. And we believe we have a solution that addresses all these three key stakeholders. So more efficient, better customer service, and better learning and career opportunities for our colleagues.
So just to speak about the EBITDA, yes, quite a few of our hotels did a positive EBITDA, and in fact, some of the leisure locations really from the day they opened. An instance would be, let's say, Wildflower Hall, for instance. It's been doing tremendous occupancies right from the word go. Likewise, some of our other villas properties like the Oberoi Sukh Villas has been doing exceedingly well, better than last year. We have occupancies ranging in upwards of 50%, even in some of our other locations. So yeah, we like to really take a long-term view of the matter. And while I wouldn't really comment on a single month's EBITDA that way, but I think sooner or later we would definitely look at turning EBITDA neutral. That's how I would answer it.
And may I just add that a number of our hotels, for example, Simla was closed. It just opened not long ago. And one of our hotels was closed. We picked this opportunity to close the hotel completely for 6 months and renovate. And that opened at the end of September as well, or if not, beginning October. I can't recall the exact date. So I think going forward, and again, I shouldn't say going forward, but I think we're very positive about current trends. I think we certainly will be able to make, as an example, let me just give an example. And again, Kallol, can I give the Oberoi New Delhi example?
Yeah, sure.
Okay, so the Oberoi New Delhi, it's not running high occupancies. We're still RevPAR 1 on STR in Delhi, but the hotel did a EBITDA of 1 crore in the month of September, and that too at a very low room occupancy. The reason it did it is because of strong food and beverage. And I'm confident if nothing terrible happens that we will be a bit positive in all locations.
That's very helpful, sir. Best of luck for the next quarter.
Thank you. A reminder, anybody who wishes to ask a question can please raise your hand. We have the next question from the line of Amit Agarwal. Amit, if you could please introduce yourself and ask your question. Amit?
Hello, can you hear me?
Yes, we can hear you.
Hi, Amit. Yeah, go ahead.
Hello, Mr. Roy and the rest of the management. My questions are regarding employee cost. I was expecting a bigger cut on employee cost because 30%. I think we should have gone for a higher employee cost cut, as we knew that this pandemic was going to last for much more longer time than it was anticipated earlier. My second question is, what is the construction update on the new projects? The new projects will be, is that going at the same speed as pre-COVID, or they have slowed down a lot? My third question is regarding the catering business. I had an update from one of the Delhi hotels that you started the catering business 15 days back. What do you have to say on that? And is this catering business and home delivery business going to stay after COVID, or is this a temporary business plan you have in the mind? My other question is the staff getting regularly tested at the Roy properties? Because I've been to one of the bars at Delhi property, so I was a bit conscious about talking to the staff over there. So are they getting tested, COVID testing every 15 days, 10 days, or none like this? And the management is silent on the foreign properties. How are they doing? Like the property in Bali and the property in Dubai and the property in Europe. Thank you. These are my questions.
So, gosh, Amit, first of all, I should have taken notes. I forgive you. You have, okay. So, Kallol, you want to start, and I can always add?
Sure. I'll talk about a few of the points that you mentioned. Firstly, let me clarify, Amit, that the employee cuts, if you meant salary cuts, it's not that the salary cuts is 30%, right? What we've shown is a total overall cost reduction or payroll cost reduction of 30%. And that is the highest, not only in the industry, but in many other, taking many other industries together. So you have access to the financial statements of all other companies, and you will see that this is among the highest. So we believe that this really our employees have taken it very positively, and this is going to help us in the long run.
And Kallol, do you want to talk about the fact that when we initiated this, and therefore those impacts as well?
Sorry, Vikram, I couldn't hear the last part. Vikram.
Yeah, so we during the lockdown, we actually didn't take any measures.
Yes, that's true. Absolutely correct. Yeah. Well. The Prime Minister, as you know, had appealed to everybody, to all employers, not to retrench people or not to lay off people. And the first 3 months, therefore, we were very strict. We know that generally in the industry, not only in our industry, but in other places, probably many people went ahead and cited Supreme Court orders, etc. But we were very clear that we don't want to deviate from that mandate. So that is one. But even after that, what we've achieved, I think, is really something that will help us in going forward. I think the next question you asked about the projects.
May I add one other thing, and please forgive me for saying this. I mean this with all good intention. But, we count on our colleagues to go out and look after our guests, like their family. And they do that putting their hearts and souls into the work that they do. So any measure that we take, and unfortunately, like you said, the situation is very, very severe, but it has to be done with love. It has to be done with kindness. It has to be done with communication. Because these are the same people who, when things turn around, you want them to stand behind the organizational values, to support each other and to support our guests. And it pains me, I'm involved in this, it pains me to do anything that impacts people's human lives. And these are human beings, they have families at home, they have children. So I just want to put in a word of caution. And again, please don't get me wrong. We can't change what's happening around us, but we can deal with the situation with love and compassion and with kindness. And for us, that is very, very important as we deal with our colleagues, communicating with them, even if we have asked people we have retrenched, but how we treat people, the support we give them, the care we take, at the end of the day, it's important that, we feel, for us, our organizational value is very important that we do the right thing. And at least I want to be sure that what we've done is the right thing, and we've done it in the right way. So I'm sorry, please forgive me for saying this, but it's just something I feel very, very strongly about, and I hope you don't mind me pointing that out as well.
That's okay. I do understand.
Just one clarification, Amit. So, what I mentioned about the percentages being the highest, that is for standalone. And this is an important point to make, because in India, unlike other countries, so companies which have a lot of other, your places of business in other countries, they've got access to the furlough, etc., where there's a lot of support that has come in from the government. So that is not the case with India. So therefore, when I say standalone, we need to compare standalone one-on-one. Coming to your other questions, I think you asked about projects. So yes, whenever our projects have resumed, wherever they could resume after the pandemic, and of course, labor was not available during the initial part of the pandemic, and with the lockdown, no work was permitted. But post that, it's not as if because of lack of funds, any project has been held up, and all our projects, as was planned, went underway. In fact, one of the renovations completed in the last 2 months, and it is now open as we speak. I think there was a question that you asked on the catering business. So I don't know where you got that information from, but as and when we come out, if at all, with any such scheme, we will definitely publicize that. On the international
sorry to interrupt you. I received a message from Delhi hotel that Oberoi is open to do Diwali parties at home. So that's catering business, I suppose.
Well, Ms. Vikram Oberoi can possibly answer on that. But
of course, we will, for our guests, we will do whatever it takes to keep them engaged and keep them loyal to us. And we will do, if a guest wants us to do something at their home, we will absolutely do it.
So is it a long-term planning, or is just to earn some money during the pandemic, like home delivery business and catering business?
So I think that's too specific a question, Amit.
Okay.
I think, and I'll tell you why I say that, because what is important is that we engage with our guests and we retain their loyalty. And if that is something that we need to do long term, we will do that. If we need to cater to them at home a year from now or 2 years, and we believe that will instill their loyalty, we will do that. One reason why we're doing it today is because people aren't going out as much. So it's an important way to engage with our guests even today. The key thing is engagement and loyalty. And this is one way to achieve that if guests are not coming to the hotel. If we need to do that going forward, of course we will do that. We will evaluate it. But I don't think we need to take that decision today.
I think 2 other questions you had. One was on international hotels. This is all dependent on the respective countries. In most cases, the international borders haven't opened up, and in fact, wherever they did, many of them have closed back again. So therefore, international business in Bali and Lombok is yet to commence. Marrakesh has just commenced. We have done exceedingly well at Al Zora. In fact, it was open throughout the pandemic, and we've done great occupancies at great rates in that hotel. Dubai has been doing reasonably well. Egypt has been doing reasonably well again. We have had some cruises also running on the Nile. So that's generally about international business. And the last question I think, Amit, you had was on staff COVID testing. While we are testing all of them, I think Vikram can really speak, because that is something that we are really, really very particular about.
So I think again, it's not just about testing. Testing is very, very important, and we must test, and we do test. But doing testing 2 weeks every 2 weeks doesn't solve the problem, because I could go out, I could get COVID, I could be infected, and I may not show symptoms for the first few days. So I think it goes beyond testing. It's the protocols we have for our colleagues, equally the protocols we have for our guests. And we have to do a number of things to ensure that we are taking all the steps necessary to make sure that our hotels are safe and the best in class for our guests and equally for our colleagues, for each other. We need to ensure we do that.
But by the way, in case you're more interested, Amit, there's the full protocol of the standard operating procedures are available on our website, and that covers every single department.
Okay.
So you can please, you may wish to just go, and you can even download it if you wish.
Yeah, and
that's okay. Yeah.
And Amit, what I'd encourage you to, even if you spend a minute or two, they're really, really exhaustive. We put them on our website, and we put them on our website months ago. And we said, we've done all this work. Let's see what we can do to help the local community, to help smaller hotel chains. So we put this on, and it's to instill obviously confidence in our guests on the measures we're taking. But equally, if anybody wants to use these standards, and I'll give you an example. I got a call or an email, not a call, from a colleague of mine. He used to work with us when I was general manager at Rajalas. This was back in 1998. And he's now working at the Sofitel in London. And he sent me an email to say, listen, we've been going through all the Oberoi standards on safety and hygiene at the Sofitel in London. And that made me feel good that our colleagues have worked so hard to make these standards available, not only for us and for our guests and for each other, but for the industry at large. You can equally use them at home. So we've really, and these are very, very detailed. If you go, you will see how detailed they are.
Okay, thank you. I'll definitely go to the website and have a look.
So
thank you.
We'll take one last question from
Amit. Thank you so much. Thanks, Amit.
So we can take one last question from Rashesh Shah. Rashesh, if you could please restrict your question to one in the interest of time. Thank you. Rashesh, we can't hear you.
Now you can hear me?
Yeah, now we can hear you.
Yeah. Sir, there is a reduction in expenditure to that, 116 crores during the quarter. I just want to know how much of it is sustainable from a longer term perspective.
Rashesh, if I may take that question, thank you so much. I hope everything at ICICI Direct is good.
Yes.
And thank you for your insightful analysis in the past. Well, we have said in the past that we hope to at least keep our expenditure low by 20%. I think it will be more than that now because some of our technological innovations, etc., are really, they seem to be stabilizing. So I would not like to give an exact figure, but I think it would be anywhere between 20 to 25% in the long term.
Okay, sir. Thank you, sir.
Thank you so much.
Thank you. This was the last question. Thank you, Mr. Vikram and Mr. Kalol, for taking out time and answering everyone's questions so patiently. If there are any closing remarks that you would like to make.
No, Karan. My best wishes to everybody who's on the call, and of course to their families and colleagues. And we look forward to days when we can all travel and meet, and we don't have to do everything online.
Great.
Thank you so much, and wish you all a very happy Diwali and best wishes for the festive season.
Thank you.
Yeah, happy Diwali to everyone and to your families too.
Thank you. Ladies and gentlemen, on behalf of Ambit Capital, I wish you all the very best for the remaining of the year, and thank you everyone for joining the call. We can now disconnect your lines. Thank you.
Thank you so much. Cheers. Bye.
Cheers.
Bye.